Hi there. Thanks so much for tuning in to the Trade Setup. I'm Neeraj Shah. It's a busy week that we have at our hand. The German election outcome, the Japanese election outcome, if that impacts the markets in any fashion. But there's a rare G4 central bank governors meeting, the ISM manufacturing PMI from the US, inflation from the Eurozone, PMI business surveys from China. The Evergrande situation still continues to linger. So on the global front, there is a lot of data point that we have to figure out. So keep that at the back of your mind. Now, what's happened across the markets thus far is also important to figure out. So US markets on Friday, ho hum, but nothing dramatically great, nothing too untoward either. There are about 33 odd points out there, as you can see, for one of the indices. So that's really what shaped up as far as the Dow and the S&P and the Nasdaq go. I mean, 33 points for the Dow is virtually nothing, right? Keep in mind, though, that the yields have started to rise. 1.45, if I'm not wrong, for the US markets yields on close in Friday's session, or rather at the end of the week last week. So the US bond yields have started to inch out and they are breaking out. And that, if they really march up very, very quickly, could cause a bit of a nervousness or two. But otherwise, should be okay. Frankly, if you just look at Asia today, there's a bit of a calm. There's no great shakes on the upside or the downside for the Asian screen. And I would reckon the SGX Nifty would indicate a start which should be similar. So as you can see, almost an even Steven marginally in the green, but a bit of a calm. It's something that the bulls would really like. A start which is not looking too perturbed, quite unlike the start that we had on Monday, isn't it? And the SGX Nifty should be reflecting that. We should be having a flattish start to a marginally in the green kind of a start. So nothing untoward from the SGX Nifty side as well, and that should actually help about 0.5%. So there on your screen. Very quickly, a bit of a recap about what happened on Friday, at least if not the whole week, and to the market bread, to the NSE 500, and what within that did well and what did not before we move to the key pointers for this week and today in particular. So the MOE function should come up on your screen next, and just give us a sense of what's happened at the broader end of the spectrum yesterday. So rather in Friday's session. So the market breadth was a bit adverse, but you had enough and more stocks doing rather well. Telecom was at the forefront. Some real estate stocks were at the forefront. So all of that looked okay. No complaints thereof. But you did have the reopening trades wobble a little bit. Now, whether it's nervousness around wave three, which I doubt, or it's just some profit booking over the weekend. But everything from SBI cards to PVR to Lemon Tree Hotels, that whole basket, Interglobe Aviation, that whole basket, which was the reopening trade, wobbled a little bit in the session. Let's see if that continues, or does that, or I mean, the whole point is that the favorite pocket, or are there other pockets which are a lot more certain? I would believe the other pockets which are a lot more certain are there. Though I must say, there's a lot of very smart money moving into hotel stocks, so you have to bear that in mind. Now, what about this week's key trade setup? So if you just look at Dr. C. K. Narayan's column, and there are 3 or 4 charts that he's given out there. Let's look at the trade setup first, then we'll come to the column, and then we'll come to a couple of other things. Okay. Let's first pull up Dr. C. K. Narayan's column if we can, and then move on to the trade setup. And just if we have it, and otherwise we'll just move to the trade setup directly. Yeah. So the technical charts and more, and we just scroll it down a little bit. There is a chart out there which I thought was interesting. No, the second or the third one, which was very interesting, which I thought everybody should read. Yeah, this one. So I think his observation suggests that the support trend lines now indicate that the support levels have inched up higher, and the resistances, if you will, come in only at about 18,140 or thereabouts. So until then, I think it looks okay in terms of large resistances. So people worry whether the index can move up higher from these levels or no. I think the next large resistance from a trading perspective comes in only at 18,150, and the supports have also inched up higher. So maybe the rally continues unfussed. As the trade setup also suggests, 18150 is the near 18150 levels is the key resistance that everybody's watching out for. India VIX is not shedding much ground, but I don't think that's a large fear factor. And almost everybody is saying that one eye should be out for chemical or raw material shortages due to China curves. Now, what are these China curves? We've already seen Evergrande and what is doing to the on the economic side, but the government itself has, maybe in order to meet their green targets or to keep the skies clear for the Winter Olympics in China, but they have embarked upon a series of power cuts, some of them in key industrial powerhouse regions which have not met their emission norms. And Nomura's note on that is interesting. They're saying that the power curves will ripple through and impact global markets. Very soon, the global markets will start feeling the pinch of a shortage of supply, from textiles, toys to machine parts. What I tell you, viewers, from an Indian investor's perspective, is to try and figure out which are the areas in which these Chinese power curves will reduce production. And if there are shortages across the world, where is it that either the Indian supplier fills in the gap or the Indian supplier benefits from the price rise that happens because of the Chinese power curves? These supply chains don't get readjusted in a jiffy, but if there are price hikes in anticipation of shortages, then the Indian manufacturer would tend to enjoy it the same as well. So you have to keep that at the back of your mind as well. It's very important to look at this aspect. By the way, important next 2 days or important this week, also from a perspective of how the FM is going to meet Moody's tomorrow and pitch for India's rating upgrade. That's the big talking point. And of course, telecom, since they're in a bit of a hurry to move higher, we've seen all telecom stocks gain a lot of ground. It'll be interesting to see if there is more in store. What are the stocks to watch out for? United Breweries. So the CCI has imposed a penalty of 751 crores on the company for anti-competitive conduct in the beer market in India. Now, viewers, there are mixed views around it, so just please be careful. I have read two notes which say that this is a dampener. Unless the timelines get postponed, they might have raised debt in order to pay for the cash, and the cash on the books get wiped out. So in order to pay the penalty, they might have to do both. So there are negative news as well. Goldman Sachs, incidentally, is a buy call on UBL with the target price of 1501. There's one more brokerage which actually put out a buy call, which is an even higher target price, because they believe that this removes the overhang, that goes away, and the long-term growth story is great, and therefore focus should shift back to volume growth, and this should augur well for UBL. Now, mixed views out here. I would suspect that the stock should start off weak for sure, because there is a penalty and UB will have to cough up this sum, right, which is high, 751 crores. It may be lower than what was believed by the market, but it is still a high sum which they have to pay. So I would presume that there should be a bit of a weakness on open, but let's wait and watch. I might be wrong. Sugar companies, again, my view is very different from what the street is factoring in. So what has happened? Firstly, the Uttar Pradesh government, only the UP-based mills, by the way, keep in mind, but the Uttar Pradesh government has hiked the SAP prices by 25 rupees per quintal to 350 rupees per quintal. You would read a number of 250 rupees, that's per ton. So 250 per ton or 25 per quintal. Typically, sugar parlance is per quintal, so I'm using the per quintal rate out here. So 25 rupees per quintal is higher than the 20 rupees per quintal believed. Again, a lot of notes have come out saying that this removes a big overhang, and from here the sugar prices or sugar stock should rally, because the selling price is 34.37. From a formality perspective, what was hoped for was that the price hike in SAP would be 20 rupees per quintal, and there will be a corresponding MSP increase being announced as well. Both have not happened that way. The price hike is 25 and not 20, and there's no MSP mentioned thus far. To my mind, this should be a small, yes, an overhang goes away, but could there be a small reaction downwards? I believe it could be, but let me tell you, this is my belief. The street per se, the 2 or 3 notes that I read, all of them say that no, this is actually an overhang gone and it's a positive. So let's wait and watch. Z Entertainment, Invesco has renewed the demand for Z Entertainment board reshuffle. Never mind what Sony and Z are entering into. I think one of the notes suggested that Invesco believes that this has been stitched in a bit of a hurry, the deal. Let's wait and watch. There's been a bit of a rally and a bit of a pullback in Z Entertainment. Sell-side brokerages are bullish, as I told you last week. Let's see if that continues. Some stocks in news. SJVN, they've bagged a 1,000 megawatt solar power project with tentative cost of construction and development of 5,500 crore rupees. Watch out for this one. Again, what accrues to the company and the margins thereof is not declared as yet, but this should be interesting. Enables Housing Finance, they've sold a portion of its stake in Oak North Holdings for about 251 crores. It's a small positive for a stock that has been languishing in the last series or the last 30 odd days. And Nuclear Software Exports, they've approved a buyback of 7.8% of the equity of the company at 700 rupees each. This stock might have a reaction. Sansera Engineering on newly listed company, and Nomura funds bought about 6 lakh, Plutus Wealth bought about 5 lakh, IFL Mutual Fund bought 4.7 lakh, and Adia bought 4.87 lakh rupees, 4.87 lakh shares at 821. So a fair degree of buying that was done in Sansera on open. So let's wait and watch what this one does. And some key insider trades. The reason I bring it up is because there has been consistency in promoter buying. So whether the stocks react today or tomorrow or in 1 month or they don't react at all, I don't know. But in these companies, I have seen multiple instances of promoter group buying over the last few days, both in Aegis Logistics and in Mun Infra. Do watch out for those. I'll wrap up with a key brokerage call, and it doesn't surprise me that it's yet again ONGC. Mind you, JP Morgan has not raised the target price. The 190 target price remains for them. But they are reiterating the call, saying that they believe ONGC remains the best position in the entire gas, coal, oil price surge. So keep in mind, they've analyzed Coal India, ONGC, gas companies, etc., GAIL maybe, and they are believing that ONGC is the best position. Saying coal and gas are in an upward spiral with peak winter heating demand still ahead of us, increased power cuts and production cuts in China and Europe, which I was speaking about. So therefore, according to them, there is an upside risk to Brent prices on a potential gas to oil switching. Because this might be serious, because from whatever little I've read, China has begun buying gas supplies in a big way, and there is a fear that gas might be short supply, and therefore there might be issues around the winter season for Europe and China and Russia. So keep in mind, Russia is a producer, so they will never have an issue, but some of the others might. And JP Morgan believes that ONGC's gas realizations would increase by at least $1 MMBTU each in October and April resets. And I think every $1 is about 5,000 crores to revenues for ONGC. That's big, right? And for no additional cost, by the way. So you kind of believe that it all drills down to the bottom line. And at spot Brent price, the estimate the stock is trading at about 3 times price to earnings multiple. So they believe that ONGC is the best placed stock. There's been a bit of a rally in ONGC, a breakout of sorts. Let's see if this lasts. So watch out for ONGC and Oil India. Watch out for Coal India, because coal prices are higher. Watch out for GAIL, because GAIL benefits out of this. That whole ecosystem, there's been a bit of a rally, but do your math in order to try and figure out if there's more in store. Well, viewers, that's it from my end, at least for the trade setup, from all of us who put this piece together. Thank you so much for joining in. And if you're stepping out, please stay masked up. Have a safe, profitable day ahead.